Good afternoon, everybody. It is Saturday, June 8th, and we're going to start off with our CoT report here from the data we got yesterday on June 7th. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We'll start off with the SPX as we usually do, and we'll see that commercials did cover a large part of their shorts into the down move. That happened at the end of last week and the beginning of this week. Remember that we know that because this data is collected end of day on Tuesdays. So we get about a 3-day lag on getting the information. But as you can see, these positions take weeks and months, sometimes multiple quarters to play out. So a 3-day delay isn't that large, but we can understand the timing on these a little bit. Last week's major levels worked out well, with 52.46 missing the low by 3 ticks, and 53.80 was our major upside level, missing the high of the week by about 4 points. So for the week ahead, 52.63 is going to be our lower rotational zone, with 53.84 at the upper. If we get over 84, we'll be watching for 54.25 and 54.56. If we happen to break below 52.63, our targets would be 52.07 and 51.74 quarter. Remember that we do have some big catalysts this week, so any big move outside of these is likely going to come on Wednesday when we have CPI, FOMC, and Jerome Powell's press conference. We're likely going to end up in more of a risk-off scenario and smaller range heading into those as we wind up the rubber band. To crypto, there's, again, no outlying position from commercials yet. We did see a shift from a small short on the down move to a long position into this push as we headed towards all-time highs, but we're still only scoring a 73 on our rating, so we prefer to wait until we get to the 90 or 100. Remember, those are the areas you want to be paying the most attention, as that signals a very outsized move. On to commodities. We're still waiting on clear signs from the energy sector. While natural gas is having a large rate of change week over week, that signifies more underlying currents in the repositioning. We had about a 40% shift in positioning this week compared to historical averages. And with China coming out of its bear market, those are both favorable, but we're still not getting any clear signals. So we're going to continue to watch metals. Gold, we didn't quite get to a 3-year max position back here on May 21st. We stopped about 70,000 contracts shy. But now, as we have gone lower since mid-May, we do see commercials beginning to cover some into that. Last week's plan on gold really only showed 2 trades, and both were at the pivot. So we had 2 longs as we headed into blowbacks and RTH on Thursday, and then into RTH right before RTH session around London on London Open on Friday for the big short. Maybe at the end, towards the end of RTH, there was a nice short breakout under 23.30, but those were really our only trades for the week that showed up. As we look ahead, and commercials are unwinding their position, we really are going to watch this 22.93 level closely. It's the lower end of our rotational zone for this week, and below that, we'll look at testing the March breakout at 22.36. If 22.93 holds, then our pivot is 23.44 with upside targets at 23.73 and 24.10. Just a quick recap on the 6S from last week. We were looking for a breakout over 1.111, and we had that show up early in the week for a great move up to 1.1213. That was probably the cleanest move of the week, what we were looking for. And if you had taken that, whether you are a day trader or a swing trader, never would have been taken out of that trade, and it worked out. So for the week ahead, we're going to look at the 6C as it's getting a little more clear on setups. The easy money, at least the easiest breakout money on the 6S, is gone, but we do look for these to take hold again for multi-week, multi-month, so you can still use these levels as you go ahead, but you're better off making daily plans now to see if that comes back inside this lower rotational at 1.1117. on the 6S. For the 6C, multiple participants are at 1 year and 3 year maximum and minimum positions accordingly. Your major line to watch is going to be spot 72860. As long as that holds, then we'll be looking for longs. So we've been consolidating in here. That 72860, we will not look to buy the dip or catch that falling knife until we get over that level. Then we can look for longs to begin taking hold. And if we get over spot 734, 05, spot 73410 in the lower edge of this blue, then you're going to have more clear skies for an upside move targeting spot 741 eventually. Again, just make sure if you are going to be taking any longs, you wait for 72860, as that is going to be your best signal on the 6C. If you have any questions, you can check us out on our Discord. You can check us out on Twitter, or you can check out the courses that we offer if you want to learn how to do this from both a macro and day trading perspective at stickstrading.com. Thanks for watching, and I hope everybody has a great week.